All right. Good morning, traders, and welcome to the opening bell. Today is Tuesday, June 30th, and I'm Michael Boutros, Senior Technical Strategist with FOREX.com. Pleasure to start off the day with you guys. It is a quiet morning, but it is a treacherous time, okay? It's the last day of the month, last day of the quarter. We have a shortened holiday week ahead of us with major event risk on tap. Non-farm payrolls are slated for Thursday of this week. Obviously, Friday will be closed for America 250 and July 4th. So there's a lot on tap, but not much in the FX front. You did see dollar yen mount an assault on that critical resistance zone we've been watching for a few weeks. That's kind of like the main takeaway right now. Dollar strength seems to be kind of the theme of this end of month flows. Remember, guys, on the close of the European session, close of the US session, really prominent. Those flows can really wreak havoc on intraday price action. So we're going to want to remain nimble. We'll take a quick walk through all the US dollar crosses today. Gold, oil, Bitcoin at that key support level, down 53% from the highs. Any other questions or trade setups, feel free to throw them on the message board. Be a pretty quick one today. All right, great to see everyone in the room. Hey, Ashish, Don, James, Kevin's in the house. Happy Tuesday, Latanya. As always, Maury, Seth, great to see everyone this morning. Here's what the DXY looks like. Nothing's changed since the beginning of the week. Initial support that we talked about at 101.13. Yeah, that essentially held yesterday, okay? And the median line was right there. So we're basically just sitting at the slope, at the median line, just below a major hurdle in price. Remember, that's 101.73, 101.92. That's the breach you need to get the next major leg and fuel higher in the DXY. It's the weekly chart towards 102.99, 102.86. On the near term, though, the threat is that we may get some more exhaustion off this pullback if this buckles, which is why those end of month flows, guys, end of quarter flows specifically, you want to be really cautious. Today is one of those days, one of the 4 days of the year where I just do not trust intraday price action. So stay nimble. Any new positioning that you take, you want to take it, a degree of magnitude of your normal trade size, and make sure all your risk is well defined. There's going to be some play here, as always, as we get into those end of the month. So resistance 101.77 to 92. Initial support still 101.13, followed by 164 into spot 77. Ideal scenario, this holds if we're heading higher, but bullish invalidation, remains at 115 at 35. Okay, the 2024 low, the 2024 low close, that major pivot from August, from November, that converges on uptrend support. So initial support, ideal scenario, that would hold if the bulls are going to maintain this stretch. Bullish invalidation. Losses below 100 spot 15 would suggest a more significant highs in place, larger reversals in play. Topside breach opens up 102.71 all day long. 102.99 starts to run into some 2016, 2020 high. But yeah, no change. And again, the intraday price action you see today might be kind of gnarly. Here's what it looks like on the euro. Getting really messy on the euro. We talked about 1355 as sort of line in the sand. If you bring up the weekly charts, I showed you yesterday the monthly charts, all of it harken to this key zone at 1355. Median line support, 38.2 off last year's low. You got the close highs from April, the low stretch from July. All of it suggests right here should be a major inflection zone, and we're heading into the close of the month. So that's the weekly. Here's the daily. Okay, 3-day advance faltered at former support. What do you want to do with that? There's still room. Wouldn't be surprised if we see a ball towards 1480, 1490 for a larger check of former support. But you're still in the downtrend. You're just responding to downtrend support. All right, so resistance 1482, 1492. Want to see that hold. If we are heading lower in the euro, you need to close below 1355 to mark resumption. You're looking for 1275, 1228 on a move lower. As always, guys, not a trade recommendation from FOREX.com or StoneX, just my humble interpretation here. We have to stay nimble on these monthly crosses and not get married to any near-term trends. But that's sort of the outlook, unchanged on the euro dollar. Here's sterling. Really nice hold yesterday at 32.62. That was the first level we highlighted, just a near-term resistance. The swing highs that we made last week, it's going to be also a basic 236 of the decline off the highs they made in May. And you can see a perfect tap there and a move lower. Remember, the lateral levels on sterling are one of the cleanest out of all the majors. Initial support 31.87, 31.93 all day long. That's also the weekly, opening range low that you set on Sunday. So objectively, that's your weekly opening range low, 31.93, 31.87. The key zone of support, the zone of support that we were talking about ever since the break here of the monthly opening range, was 31.53 and 31.40. That's the objective swing low from May, the objective swing low from August, the objective 100% extension off the high. So two measured equal legs, both of it converge right there. So you saw a really strong reaction there last week. Here's initial resistance. If sterling is heading lower on this stretch, rallies would need to be limited to 33.26, 33.02. It's the May low and the May close low. This month's opening range low and the median line. That's 33.02, 33.26. That's bearish invalidation. Initial resistance, initial support 31.93, key support 31.40. You need to break below there to mark resumption of downtrend. So it's really a decision time. We talked about the divergence that you saw on the way down on that sterling pop right into downtrend support. So if we do get the extension higher, that's sort of where you want to look for the larger inflection in price. If we fail here, you need to close below 31.40 to fuel the next major leg of decline. And by the way, if we were to get that move, that would confirm an objective break of what? The yearly opening range lows would suggest you look for third, fourth quarter low. Make sense? So again, there's really not anything changed from yesterday, but just kind of a relook there at sterling. Here's Aussie, made a little dip below support, almost tagged that 200-day moving average, but right back at the weekly open, which is where we're trading right now. So same game plan here. The whole premise of yesterday's webinar was we like the downside of Aussie. It was a big break, but we're checking major lateral support, and it's stacked just below it. 68.80, 68.60 is the 200-day moving average. 68.30 is the March low. So you're like, every 30 pips is sort of a major pivot where we could see a little bit larger of a reaction. So the downside's waning, okay? Momentum has been in oversold condition ever since the break below 70, but we're trying to rectify that today. Here's what the RSI looks like real close. If we pop back above 30, okay, and price is able to kind of maintain this pop, yeah, then you would suggest the potential for a larger recovery in price. But all things held constant, while we are bearish, the downside may be still waning. Again, some divergence into the low. You have the 200-day moving average, lateral support. If you're holding short exposure, you definitely want to be chipping away at that, reducing position size, putting a trailing stop on it, lowering protective stops to break even or better. New positioning is just not my cup of tea on Aussie from here. Make sense? Dollar CAD. Also, same exact story as Aussie. On the flip side, we've been loving the long side of dollar CAD. You guys all know that here in the room since 37.25. We start to temper all expectations near 41.70 next week. And while it did continue to push higher, that slope has kind of really just been a thorn in the side. We haven't been able to make much progress. And the momentum profile also suggests, looks a little tired, right? We broke back from overbought condition. That last rally didn't even make it into overbought condition. We're still holding the high. So look, nothing changes here either. 41.66, 41.78. That's near-term support. That's the objective weekly opening range low. That's the November high from 2024 and last week's open, okay? Converges on the median line. Ideally, the November high day close at 41 would hold support, but bullish invalidation still needs to remain at 40.35, okay? Right over, not sure how, there we go. Right over here, 40.35. That's bullish inval. So initial support, secondary support. Ideally, again, 41 would hold if we're heading higher. Bullish inval. Key resistance, 42.92. Just a bit higher is 43.35. That's this 1618 extension from the advance off the yearly low. So both of these levels on the upside, be very cautious on an approach to that region. Both significant measured moves. But again, it's one of those trades where if you're not already in it, you're still in overbought condition. We haven't broken support. There's no justification to try to fight this trade. At the same time, new exposure on the long side, on a mature trend, on a rally at the yearly high, not my cup of tea either. So be meticulous with your options here into the monthly cross. All of these are likely to give us beautiful plays heading into next month, but at the moment, they are at mature levels within the given trends that they've been in for the last few weeks. That's dollar CAD. Now, the big sort of news of the day is, did dollar yen break resistance? It is breaking resistance. We need a daily close to confirm, but this is the level, guys. 61.95 into 61.69. We've been talking about that. That's 2024 high day close, the 2024 swing high. Not Mike Boutros' opinion, not FOREX.com's opinion. Fact. It's exactly where the rally topped out when we broke out of the monthly opening range last week. We've been there for what, 5-6 days now? Here's the breakout. Momentum's in overbought, so the bulls are behind this trade. As I said yesterday, this is 100% a technical trade versus the fundamental headline of intervention risk. So we're in a bullish structure. We just broke resistance. In fact, we just held median line support right into the start of the week. Boom, there's the pivot at that key level, 61.68, 61.95. There's the breakout. So from a technical standpoint, you are constructive. Momentum's in overbought on the daily, on the 4-hour. You just broke resistance. Next level up is 63.33. And then beyond that, you're looking at that 618 again. 64 is the 1618 of the yearly breakout. Dependent on slope, that's when they become more significant. All things held constant. If this breakout is legit, 61.68 needs to hold. Why? That's the bottom end of the pivot zone, but it's also the objective weekly opening range low. If we break below 61.69, objectively, you've broken that low for the week and you're threatening a larger pullback within this uptrend. It would also necessitate a break below the median line. And the structure has been, guys, this is the same exact structure we've been tracking since May. Super, super clean. I mean, you can't make this up. So the upper parallel right now comes in right near 62.80s, but 63.33 is that measured move. Again, that's the 1618 extension of the advance off of last year's low. So 1, 2, 3. That's the 1618. Initial support 61.69, bullish, invalidation, the level of which, if broken, would suggest a more significant high is in place, a larger trend reversal is underway, is 60.36 into 60.73. That zone right there is still critical. Former resistance, the monthly opening range high, that break would suggest a bigger turn is underway. Make sense? Last but not least, we haven't been going over this, but I just wanted to show you dollar Swiss. We went over this in the weekly webinar, but we didn't do it in the opening bell yesterday. This thing has been just insanely clean. The break of the monthly opening range for June happened with a move above 80. Nice psychological barrier, but it was also the April high day close. It was a basic, well, now it's a basic 38.2 of the drop, but that level gave us an objective upside bias, a break of the median line. We were looking for a tag of the upper parallel, which converged on the August high close, the November highs, and the November high day close. Here's what it looks like. Nice pivot in price. We rallied right into that last week, failed, pulled back. We highlighted support at last week's open. Here we are. This week's open, we dropped right into it, and here we are right back below resistance. So you have the makings of what potentially could be a weekly opening range set right below resistance. What does that mean? Conviction break above 81.25 would suggest a rally towards 82. A break of the weekly opening range low, a break of the median line would suggest the near-term correction within the pullback. You'd be looking for 80.41. Bullish invalidation is back at the 80 handle, down to 79.95. That's a basic 38.2 of the rally from May. That's the April high day close. This month's opening range highs, uptrend support. It's all right here. So the levels are just super, super clean. Really, really nice. Look for a break of the weekly opening range. The immediate long bias is vulnerable below 81.25. You're constructive well above 79.95. Topside break opens up 82. That's dollar Swissy for you. Okay, 1, 2, 3, 4. Okay, that gets you through all the FX crosses. Gold, I'm still so turned off by it. We've been talking about this 74, 40.98 level for the last couple of weeks. It was support. We broke below it. It's now resistance. It's now the weekly range high. Over the next few days, it's going to converge right back on that median line. So it's like do or die. From a technical standpoint, you're marking divergence on the daily chart. From a technical standpoint, you've buckled below a major pivot, and you are technically still at risk for further losses. Now, if the exhaustion is materializing, you would need to see that topside break at least of that 40.98 level. Yesterday, I told you, look for a break above last week's open. 41.55 would be a nice tell also that we were making some sort of exhaustive low, even on the near-term approach. But this is a low conviction setup. Now, if the dollar finds more meaningful resistance and that resistance hold, maybe that could be the tailwind or at least a ceasing of the headwind for gold. But all things held constant, this is just a messy trade here. If we are bottoming, you'd need to see that pop back above the median line, pop above last week's open to suggest something's going on. Other than that, the next downside target's 38.86. That's the October swing low from last year. That's gold. Low conviction. Now, oil. You're seeing some kickback, but the pivot below last year's open is still basic resistance. That's 71.90. Remember, near term, if we are heading lower in oil, we want to see the 200-day moving average hold at 73.84 into 74.12 right here. Drill down into the 4-hour chart. Here's what that same exact slope looks like, that immaculate slope we've been using. There's the median line. Try to pop through it. So if we get the rally, maybe we push back into 200-day moving average. Bearish invalidation. God forbid, if some sort of news headline comes, things are falling apart, war escalates again, something goes bad, whatever the trigger or the catalyst is, 80.75 is the level that if broken would suggest got a bigger problem and another breakout in oil. Initial downside support targets are 66.28. That's the September high, the 2024 low day close, major pivot in price. Beyond that, you're looking at 61.43. That's the September low and the November low from last year. Fizzling out here, all the momentum right into the close of the month, right into the close of the quarter. You got some headlines that were coming out today from Iran, again, disputing some of the internal mechanics of the memorandum, and the markets didn't even get phased. So I think we're getting a little numb to the headline barrage, but keep an eye on this one over the next couple of days. Last but not least, I did want to just touch on Bitcoin because we're drilling down deeper. We tried to push into that major key support zone. I shot a piece for this for StoneX TV earlier today, which will be out probably within the hour here. You guys all know the level. 57.885 into 58.725 has been the key zone. That was our yearly target for Bitcoin on the corrective move. You have confluent uptrend support there, downtrend support there, lateral support there. It's loaded. So the focus is on a reaction here. Momentum is marking divergence on the daily chart, on the weekly chart, but here we are on the precipice of crossing back below oversold territory. Excuse me. If we break below 30 on a daily close basis in momentum and price breaks below 57.885, sayonara. The threat is for another extended move. Next leg lab takes down to 52.204. That's the 100% extension from the high. So we are at a major inflection, a pivot zone on building momentum divergence. So if we were to rebound, the onset of the momentum is there for a little bit of a recovery. If we break lower, that crack below 30 on the daily chart, well, that's another sell signal. Here's the last time that happened. Price breaking support and momentum breaking 30. So keep an eye on this. Keep an eye on this. Generally speaking, we are on the lookout for an exhaustive low in Bitcoin generally over the next month and a half, 2 months. Based on the metrics that we went over earlier in the year, on the previous crypto winters, the 4-year cycles have largely been somewhere in the range of 51 to 54 weeks. The magnitude of the decline, we're about 53% off the highs right now. We're 30% off just the May highs in Bitcoin. 7 out of the last 8 weeks have been down. We want to use some caution here. There's divergence in price. This is a major lateral zone. Watch for inflection here. If it breaks, could be a quick move down towards 52.02. If it holds, near-term resistance is back at the February low week close. You're talking about 62,795. Bearish invalidation for the Bitcoin bulls are 67,508. If you make it through that swing high for the month, if you make it through a basic 38.2 of the decline off that high from May, you're going to make it through the median line as well. That would suggest a more significant low is in place and a larger rally is underway. That converges, by the way, on the median line, basically towards the latter part of July. So from a time value, that's when it becomes a little bit more significant if that level is reached. Questions on Bitcoin or any other trade setups you guys would want to review? It's a quiet turn into the month, and those monthly crosses, those monthly flows can really wreak havoc on intraday price action. So stay nimble. Tomorrow, we do get EU inflation data. We do get the ADP data out of the United States with regards to the employment. And then obviously Thursday, we're still on tap to get the non-farm payroll report, and that's going to be huge heading into the extended holiday weekend. We're expecting unemployment to hold for 3, print about 110,000 jobs. We'll be looking at the internal metrics of average hourly earnings and those kinds of metrics to see how the consumer is doing as well. So that all comes right into the turn of the month, right into the open of the new month before an extended holiday break. So that is to say, stay nimble. Capital preservation. This is the environment where you really want to practice those measures a lot more stringently. And hopefully things are setting up where all of these crosses are sitting at key levels right into the cross of the month with some event risk on tap. All right. Okay. Well, 9 minutes early today, but if there are other questions, we'll go ahead and wrap it up here. Stay nimble. We'll pick things up tomorrow morning. Again, ADP is on tap at 8:15, so it's going to come out right ahead of this release. And we'll go over the aftermath of that move and give you guys a preview of what we should be looking for ahead of non-farm payrolls. Till then, best of luck trading, and I'll see you on the flip side next month. Have a good one, guys. Cheers.